What is a stock? In today's easily comprehensible video, you will learn the answer to this fairly simple, yet very important question. So, without further ado, my name is Daniel, and welcome to the GreenWave. A stock, also known as equity, is a security that represents the ownership of a fraction of a corporation. In other words, a stockholder is virtually a partial owner of the issuing company. Ownership is determined by the number of shares a person owns relative to the number of outstanding shares. For example, if a company has 1,000 shares outstanding and one person owns 100 shares, that person would own and have a claim to 10% of the company's assets and earnings. However, unless you're investing very large sums of money, your ownership will be well below 0.0001% just due to the enormous size of most popular companies and the large number of shares outstanding. Simply put, if you own shares in a highly profitable company, in addition to the supposed increase in the price of the stock, you are also entitled to a share of the profit, usually paid out as dividends, which is something that we can explain in another video. Stocks are bought and sold predominantly on stock exchanges, and they are the foundation of many individual investors' portfolios, although there can be private sales of stocks as well. All these transactions have to conform to government regulations, which are meant to protect investors from fraudulent practices. This ensures that especially large investors do not commit fraud by employing illegal practices at the expense of perhaps the smaller individual or retail investors. Furthermore, historically, stocks have outperformed the majority of other investments over the long run, and especially in the last couple of years, the returns have been truly exceptional. These investments can be purchased from most online stockbrokers. Probably the most well-known in the recent months for some of its controversies is Robinhood. Nevertheless, there are many others such as Ameritrade, eToro, or if you prefer a more professional interface, you could also try Interactive Brokers. Now, you might be asking, what is the reason that all these companies allow the general public to invest in their stock? Well, corporations issue or sell stock to raise funds to operate their businesses. There are two types of stock: common stock and preferred stock. However, the difference between the two is a topic for another video. For now, all you need to know is that by issuing shares, companies secure capital, or in other words, companies get money from investors in exchange for company shares. It is also important to note that stockholders do not own corporations, they own shares issued by corporations. Corporations are a special type of organization because the law treats them as a legal entity or a person. In other words, corporations file taxes, they can borrow capital, they can own property, they can be sued, etc. The idea that a corporation is a person means that the corporation owns its own assets. A corporate office full of chairs and tables belongs to the corporation and not to the shareholders. This distinction is very important because the corporate property is legally separated from the property of shareholders, which limits the liability of both the corporation and the shareholder. If the corporation goes bankrupt, a judge may order all of its assets to be sold, but your personal assets as a shareholder are not at risk. The court cannot even force you to sell your shares, although the value of your shares will probably have fallen drastically by then. Likewise, if a major shareholder goes bankrupt, he or she cannot sell the company's assets to pay off her creditors. But again, that's the start of a topic for another video. To summarize, a stock is a form of security, which indicates that the holder has proportionate ownership in the issuing corporation. Corporations issue stock to raise funds to operate their businesses. Stocks are bought and sold predominantly on stock exchanges, although there can be private sales as well, and they are the foundation of nearly every portfolio. And lastly, historically, stocks have outperformed most other investments over the long run. And there you have it, a succinct explanation of what a stock is. Hopefully this video cleared it up for you at least a little bit. If you have any further questions, certainly feel free to ask them in the comments below. Additionally, if you liked the video, consider dropping a like, sharing and subscribing for more financial content. We are just getting started here and there is much more exciting stuff coming. So thank you very much for watching and see you next time.